many sights to see.
Hello traders, Gary Wagner with WFGForex.com, your daily market update for Forex Gold. It is Wednesday, the 19th day of May, and this is the Daily Report. Gold is currently trading under major pressure, trading down approximately $30 to $35 this morning. It has had a low of approximately 1188 and is currently trading at 1191.25 on the US dollar gold spread, and I believe 963 on the euro spread. We're going to take a look at that in a moment. If you notice on my screen, I've added a new wave count. I have added wave number 4. For those of you who have been following our program, you know that we're absolutely flat in the market. We have been pulling profits over the last couple of days. According to our Elliott wave count, we were looking for a top about 1246. That's the top that I published as Elliott wave potential top. We were waiting to see if the market wanted to correct or if it was in fact going to breach and go above what I call the 1.61 wave count. It in fact did not. Traders, I'm glad that we pulled profits over the last couple of days. We had some substantially good trades this week. In this report, I'm going to talk to you about my short-term outlook on the market, as well as what I'm looking at in the near-term future. And my long-term view, I will be looking at the euro-dollar spread against gold. I will be looking at the Aussie dollar spread against gold. And, of course, this chart here, the US dollar as it's spread against gold. Well, traders, we did get a couple of indications that we were at a potential top. This is what caused me to tighten our stops, pull profits on all of our positions, and go absolutely flat in the market. The first thing were these Dojis. We pointed them out, the extreme range on the Dojis, the fact that we had that significant shifting of power. Profit taking only takes place in a upward bullish market when the bulls relinquish control and the bears gain control. But during that period, that shift, let's say, you get this consolidation type candle, small bodied candle. The larger the range, the bigger and faster the shift is going to be. The second thing is what I call the 1.61 rule that I just spoke about, and that is when you compare wave 1 and you take a look at the low and the high, after you have finalized wave 2 and go into wave 3, the projection is to take the range that you had in wave 1 and simply times that by 1.61, a Fibonacci sequence number. Now, when you times this wave, which was approximately a $100 move, from 1040 to 1140, I think it was 1145, excuse me, to 1045 to 1145, you times it by 1.61, my calculation took me to 1246. Now, the interesting thing is the absolute top of the market was 1248. We weren't off by that much, and I can actually at this point, consider this a correction, and I am going to call this wave 4. The next thing that I find most interesting is that when calculating wave 4, we simply look for a retracement of 38% or more of wave 3. Wave 3, we take the low here, we take our high here, we plot our Fibonacci calculations, and we get the following. Our 100, our 78, our 61%, our 50%, and our 38%. Now, what I find most interesting, traders, is as follows. Let's take a look at this 38% retracement level. do you find it interesting that at least currently, we'll see what happens as the market plays out, but at least currently, the low of the day happens to fall almost exactly to that 38% retracement level on our Fibonacci calculation. I do find that interesting. So, traders, in light of everything that we've seen, what is my interim view of the market? Well, I have to tell you, I am still absolutely bullish on this market. And traders, let me explain why. It seems as though, and I underline seems, it seems as though it's following a classic Elliott wave pattern. It also seems as though when you combine candlesticks, Fibonacci, and Elliott wave, we seem to have a pretty good handle on the market. In other words, I'm not shocked, I'm not shook up that the market sold off. In fact, we've been anticipating this for a while. We rode this wave 3, which was the most dynamic wave we've seen of all of these waves, and we pulled profits, not at the top, but very close to the top. When we take a look at the big picture, this was that final wave 5, our corrective phase waves A, B, and C. We did enter a long position down at wave 1. We were long down at wave 3. And we exited right in this area. I believe 1229 was our final exit point. We did have a series of trades in here. And my sentiment is this. I am long-term bullish. I'm looking for indications to see how far wave 4 wants to go. Is it going to be a really short wave and simply touch this Fibonacci level right in here and then begin to trade higher? Or could it possibly test that 50% level? Now, that would be at 1164. My personal feeling is we have to see how it reacts here, but in a typical bull market, the correction is going to be quick. It's going to be brutal. Traders, I think that's exactly the words I used yesterday. And then when people are really beginning to think, okay, this bull run is over, boom, it whips into wave 5. I'll talk to you in the next upcoming sessions as well as next week when we get more of a clear indication where I think wave 5 is going to take us. In other words, once we do find a potential support area in here, whether it's this area right in here that we calculated, if that would be a very classic Elliott wave scenario. I don't look for markets to run so classically, but we'll see what happens here. Or if it wants to find support as low as 1164, I think that absolutely, as long as it trades above that, you've still got a classic bull run. Interim term, I am bullish. Long term, I still have to say I'm bullish. However, wave 5 is the last of the impulse waves. And just as we witnessed here in wave 5 when we hit our record top, we went into a corrective cycle. So I have been receiving some emails that are asking me if we feel we're at potential tops, why don't you sell or short the market? Well, in a runaway bull market, I am simply looking to buy the dips. I typically do not sell the rallies. However, traders, once we complete waves 4 and 5 and go into a corrective wave, in a corrective wave, I am more likely to look to sell the tops and buy the rallies, especially on our first A corrective wave, because that tends to be strong. And also our C wave, I would look to be a seller there. But for right now, I'm absolutely a buyer in the market. I'm looking to buy the dips. I am absolutely not going to make a recommendation to sell the rallies at this point. All right, traders, what am I looking at for the euro dollar? I told you I'm going to talk to you about the euro dollar. I'm also going to be talking about the Aussie dollar as it's spread against gold. We're going to get to that and cover those two topics very, very briefly. I'm basing a quick calculation in terms of a Fibonacci retracement. I'm basing it on this last low here to this high right in here that's right around, it's above 1,000 euros per. And again, we're at 23% on a retracement here. It's dipped a little bit below that, but I do find it interesting that we are going right originally in this one-day move to this Fibonacci retracement. Now, if in fact it wants to trade lower though, traders, that 38%, the 38% is a viable area where it might go, which would take it to 945. But we have to see how the market wants to react right in here at 38%. So the targets and the areas that we would look at would be as follows. If the market in fact wants to take out this 23%, which I calculate at 968, and again, this is a very, very short-term Fibonacci retracement sequence because I'm simply drawing it. It's from the point in which it had almost a linear move up. 23%, we have broken through that. It might tend to look to find support here. 943 basis the euro dollar would be our next area that I would look for a target of support and an area of support. Traders, do I think this market's run is over? As I said, no. Long term, I am bullish on the market, but there has to be rounds of profit taking, breathing room within any bull run. And as I commented yesterday, the fact that we saw such a linear, strong move up scared me. It shocked me because what that told me is what goes up very, very quickly typically comes down just as fast. And traders, we are witnessing that today. Now, traders, this is what I'm finding interesting also. A lot of interesting things today. I'm sorry to keep saying that, but some days markets fascinate me more than others. In the Australian dollar, because of the unusual circumstances in the relative strength and weakness of the Aussie as it compared to the U.S. and the cross spreads in the euro, you're not getting the same kind of significant sell-off that you're getting. When I plot my Fibonacci retracement in the Aussie dollar, we haven't even come close to a 23% retracement, which would be around 1378 right in here. And in fact, we haven't actually gotten what I'll call a bona fide sell signal in there yet. And that's because this pattern here is known as a dark cloud cover. In order to take a dark cloud cover, you need what's called confirmation. Confirmation would be the following day. On the following day, you would have what's known as a black candle with a lower low and a lower high. It would look something like this. And this would be your confirming candle in here, and then that would indicate that the market, in fact, wanted to trade lower. I'm simply going to say this about the Aussie dollar gold spread. For markets right now, it has more resilience or strength than any of the other markets. It's sold off less, but that might be due to the fact that it's gone up the least amount when you look at it in terms of its cross trade, meaning if you're in Australia, buying gold with Australian dollars, as opposed to what we're doing in the States, where our cross trade, when we look at the Aussie dollar, we are then converting it back into U.S. dollars. So I do have a number of subscribers over in Australia. I do want to always give you my take on gold as it relates to your particular scenario. What am I looking at? Well, we want to look to reposition ourselves on the long side. I'm simply a bull. Whether it be the Australian dollar, the euro dollar, or the US dollar as it's spread against gold. Take a look at this linear move up. It's incredibly strong. You've seen it go from 1,200 Australian dollars up to 1425. It's been a phenomenal move. And so my sentiment is, let's look to get an indication, a clear indication of the other currencies in the cross spreads where they're going to bottom out, to reposition yourselves on the long side. Traders, this has been a most interesting day. It's been a phenomenal week for us so far. we have been able to pull some substantial profits out of the market. And I think more importantly than that, we were able to be flat before the storm. I want to end this program with a story. I think I used it a week, maybe 2 weeks ago, but I think it's really appropriate here. There was an incredibly successful trader in the U.S. stock markets named Herbert Hoyle back in the 1950s. He was being interviewed, and the question was presented to him, Mr. Hoyle, what do you attribute to your success in trading the markets? Mr. Hoyle paused for a second, looked at the interviewer, and said, I guess if there was one thing that allowed me to be successful, is that I always sell too soon. This has been Gary Wagner with WFGForex.com, your daily market update for Forex Gold. Wishing you, as always, good trading. We'll talk to you tomorrow on Thursday. Bye-bye.